Welcome back and thank you for staying with us on KTV Prime Time News. Now it's time for the discussion talking about financial security. Now financial security is of great concern to most people, especially to them that have a family, and when groping in the wilds of thoughts of insurance, thoughts of insurance rather kicks in. And insurance companies are large investors in the financial markets who might safeguard your financial stability by insuring the risk. Is it any better than life savings? Again, which would be the best insurance plan? And lots of questions requires deep thoughts before execution. And as we try to solve the jigsaw puzzle of the financial stability, we are joined by Beverly Akech, who is an insurance expert, to shed more light on this. Thank you so much, Beverly, for dedicating time for this discussion.
Thank you so much for having me.
Right, now we're talking about financial stability, and this is really a top priority to people that are struggling to make ends meet wherever, even in the city and everywhere. Financial stability, it cuts across every place. It's a common denominator, I would say.
Yeah, sure.
And financial experts will propose that for you to have a financial stability, for you to attain financial stability, you should probably opt for insurance, and other experts will advise that you should do some sorts of savings. So we want to get an insight from you as an expert, which way would really work best for someone who is planning to attain a financial stability.
First of all, thank you for having me, and today's discussion is very important to any Kenyan who would like to experience some financial stability, and financial liberation by the end of the day.
Right.
So when it comes to savings and insurance, the individual needs do vary.
Right.
And also, what are your goals? At the end of the day, as a financial consultant, what we'll do is we'll sit you down, analyze you as a client, and analyze you with your goals, because you must have goals.
Right.
For you to desire to have a financial stability or financial freedom, you have goals. So under goals, we have different types of goals. We've got the medium-term goals, we've got the short-term goals, and the long-term goals by the end of the day. So what we will do, or there's something called capital mix, whereby we tell you that do not put your eggs in the same basket,
yes.
So by the end of the day, you'll still have a savings plan, and you'll also have a life insurance policy.
Right.
Insurance provides you with different type of platforms whereby you can be able to access the medium term, the short term, and the long term goals by the end of the day.
Right.
Yes.
Now, most people don't really understand when you're talking about, the moment you mention insurance, and a really quick thought, another thing that comes in mind is assurance, because now you find that there is life insurance and then there is life assurance. So what's really the difference between the two, life insurance and life assurance?
The difference between assurance and insurance, the A and the I. Now, assurance is guaranteed. For example, in insurance, we have different plans. For example, when you take up maybe an education plan, which has a definite term, to mean if it is 10 years, it is 5 years, it has a definite period when it will mature, when the guaranteed amount will be paid back to the client.
Right.
Now, insurance is whereby it is in the event of an occurrence happening, that is when it is paid. For example, a motor insurance, a motor insurance will only be paid in the event of an accident.
Right.
It is not guaranteed that you're going to get an accident. It is if. It is maybe not by the end of the day. So that is the difference. Assurance is guaranteed. Insurance is payable in the event of the occurrence happening.
Right.
Yes.
Now it's good that you've mentioned the motor insurance. And most people, of course, when you talk about insurance, the types of insurance that most people know is the motor insurance and probably the life insurance. So what are the types of insurance that people should really get to know of, so that when they're going to buy an insurance plan, they know there are also this and this alternative?
There are two major broad categories of insurance or assurance. We've got the general and the life. So under general is whereby now we have the motor insurance, we have the work injury benefit, we have the personal accident cover, we have now something like domestic cover whereby you get to insure your household items. We have even the agricultural insurance, you know, different kind of general insurance. So, and when we come to now the life insurance, is whereby now we have the ordinary life. We have ordinary life whereby you can take up a life insurance for yourself. You can take up an education policy if you have a young one. You can take up a funeral insurance. You can do a retirement, a pension package. You can have an annuity. An annuity is whereby it is more of a retirement package, but it is an amount that is paid terminally until you die, you know. Right. So those are the two major categories of insurance, but they're now broadly explained or advanced depending with the kind, every need. For example, while we are here, you as an employee here, you must have a work injury benefit insurance, of course, in the event that you are involved in an accident while you are within your premise of work, then the insurance is supposed to come in and play. We also have the theft insurance, fire, burglary. Yes.
Right.
Yeah, variety of insurance.
Right.
Yes.
Right. Now, and talking of insurance, you know, in the public domain, mostly people, when you tell them about insurance, probably because I've seen it with people who sell insurance policies, and then they'll tell you that you know, if you approach a young person, you're telling him that I need you to I'm advising you to buy this insurance package, this insurance plan. They say that you know, I've not reached that age where I really need an insurance, probably because now most people think that insurance is meant for the old people and probably people with chronic you know, illnesses. So what, as an expert, who are really best, I mean, which category of people really need insurance?
This has been a notion, and sometimes I say it is out of ignorance. Everybody needs an insurance.
Right from birth?
Yes, right from birth. Everybody needs an insurance by the end of the day. It is only that sometimes it is the ability to afford one, you know. But most of the insurance industry has been regulated in a way that most people can actually access an insurance. Any person requires an insurance, and actually it is advisable to take up an insurance policy when you're young, because insurance with age you know, there's a way that the younger you are, the lower you pay. The older you get, the higher you pay. Right? So it is advisable for every person, every Kenyan who can afford an insurance. And currently insurance are affordable on the bare minimum of like 20 bob per day. Any person can actually, any person that is working or has a business, whether in the formal or in the informal sector, can actually afford an insurance.
Right.
So it is not a matter of the wealthy versus the poor. No, any person can have an insurance because it is a basic need. You know, one thing that people do not understand is that insurance is a basic need.
Right.
They think that it is the last option amongst all their priorities. It should feature as the first thing on your list. It is a basic need.
Right.
Yes.
All right. So moving forward, probably if I'll probably attend, I don't know whether it's in primary schools where we're being taught about basic needs. They're telling us of food, shelter and clothing. And of course now insurance.
Yeah, insurance has actually fall under a basic need. And why am I saying this? For example, you need to access an hospital. And if you ask Kenyans, they'll tell you that going to the hospital has proven to be a bit expensive. So you find that people prefer going to a private hospital and like the public hospital because of the way you're going to be attended to. And going to the private hospital, it means you really need to dig deep into your pocket, and insurance will come in handy for you. So the idea of you all the time thinking, you know, like you're worried, insurance takes that away from you. It gives you that peace of mind, you know. You know, in the event of any sickness befalling me, I got an insurance. Insurance is that person that you need, and is that person that will have your back when everyone is running away from you.
Right.
Yes.
That's interesting. Now, another question that probably really need to, you know, people really need to know, because you're saying that insurance is cheap. There are even packages of someone you're expected to pay 20 shillings per day.
Yeah.
So what happens in the event that probably you are under an insurance cover and you are expected to pay premiums, but then you skip to pay the premiums? Probably, let's say that you're supposed to pay it probably on a daily basis, weekly basis, or monthly basis, but you skip that month or that duration on which you are supposed to pay that insurance. You don't pay. So what happens in that event?
Ideally, by the IRA rules, is the moment you skip a month without paying for your remitting your insurance money or premiums, you are not on cover. And this one we are talking about now, the endowment plans, like you have an education plan, or you are planning to, you have an unit linked, or it is a life cover, you know, let's just say, for example, a life policy. If you fail to remit for 1 month, it means that ideally you are out of cover, you are not on cover. So it means should something happen to you at that moment, then you are naked.
Right.
But now it depends again with the different insurance companies. They give that which we say a grace period. Most of the insurance company will give you a grace period of like 4 months, to which you need to remit the premiums,
yes,
to ensure that you are up to date. Because in the event of a claim, for the insurance company to honor the claim, what they'll tell you, they'll require you to pay the outstanding premiums, or the money that is outstanding, the months which you have not remitted your money, so that the claim can actually be honored. So to avoid such scenarios, we always advise clients to ensure that they are up to date with their premiums. But you know, by the end of the day, things do change, and COVID-19 taught us a lot of lesson. That today you can wake up and you had a lot of energy, and tomorrow you don't have that energy. Today you're working, and then the next day you don't have a job. So some insurance companies that actually did consider, because by the end of the day we are bridging the gap between the producer and the consumer. No, the insurance cannot exist without the consumer. They have to give a listening ear to the consumer and get to know their needs and address their needs. So you'll find that some insurance companies will tell you that in the event of any occurrence, like you don't have a job, come to us. We are your friends, we are not your enemies. Come to us. We are going to help you walk that journey, because we have different options. You don't have to necessarily lose your money, because that has been a notion about insurance. That you want to take insurance, you're going to lose money. Some people say they see an insurance agent and then they say, that's a thief. No. You really need to have a conversation with your agent or your insurance person to take you through the nitty-gritties of the package that you've taken. Insurance is very friendly. We are very friendly. Yes.
All right. I hope they are friendly indeed, because you as an insurance expert, and you have a friendly look. I hope, you know, even the people out there in the insurance field, they also have the friendly looks.
Of course.
Now, another thing that would also be interesting to know, because you know, you're saying insurance. You take an insurance, and it kicks in when a risk occurs. So assuming I take an insurance, or rather anyone takes an insurance cover, and then throughout the period where you took this, the period where you signed up for this insurance policy, the risk never occurred. You know, it could be 1 year, 2 years, 3 years, 5 years. Even if it's the health insurance, because me, I don't even remember the last time I went to the hospital. Of course, that's the grace of God.
Say amen to that.
Yeah, amen, really. But you know, I don't fall sick probably in a year or something, and you've been paying hefty amounts. You know, you're paying large amounts, of course, because the insurance are varied. So what happens in an event that you've been paying insurance, but that risk has never occurred? And then, you know, you calculate, you really find that you really paid a lot of premiums. Is it possible to claim at least some amount of the money?
First of all, we need to understand on which basis does insurance operate. You know, by the end of the day, if you look at it, for example, you have a car. Let's say your car is worth 2 million. Then I have a car. My car is maybe worth 600 or 800,000. You know, you pay premiums for your car, right?
Right.
The reason why you are paying premium is to cushion the unforeseen risk.
Right.
Insurance takes care of something that you cannot see. You have not planned for it. You are only cushioning. Should it occur, then it means you have an umbrella to cover you during the rainy days.
Right.
So insurance operates on a pool of large numbers. I have to bring mine, you have to bring yours, another person has to bring theirs.
Right.
So let's say in a pool of 10, what is the probability of the 10 people claiming? That is how insurance operates. So if out of 10, 2 people claim, it means we are going to use your premium, they are going to use my premium, these other people premium to pay these claims.
Right.
You get it? So for mainly general insurance, you cannot claim if you did not use it.
Right.
Yes, because should you have used it, and assuming you had a 2 million car, where were we going to get the 2 million? And maybe for your 2 million, you only paid maybe 100,000 for it.
All right.
You know, you are paying a small premium for that big amount. In the event of, let's say, a total damage to your car, it means we either repair, and if we are not able to repair, we pay the car.
Right.
You know, we give you another car.
Yeah.
The same as the one that you had.
Right.
You know, we indemnify you. To mean we are taking you back to your original position where you were before the occurrence.
Right.
So there's no way we will refund the money back to you because you did not claim.
Right.
If you did not claim, thank God that you did not claim, but another person did claim and we utilized your money on it.
All right.
That is how insurance actually operate, a pool of large numbers.
Right.
So you have to come in as a pool and we all depend on each other. Yes.
All right, that's really interesting insight. You know, a lot of things that people really didn't know, but now at least we get to know this. Now I don't want us to wind up just
just something that is in the insurance. Then we have now the assurance. The assurance is whereby now people don't understand the difference between I need to take an education policy, I need to have a unit linked or an investment plan with an insurance company, and a pure life insurance. We've got pure life insurance that pays in the event of your demise or someone's demise. We have an endowment policies, which means it pays bonuses in between.
All right.
You know, or an education policy that you save towards your child's education need.
Right.
You know, so you are cushioning that should something happen to you as the main breadwinner to this family, where will your family fall? Insurance will come in and stand, though we might not really feel in your shoes, but we actually offer a helping hand.
Right. That's so interesting. Just in a minute, I want you to tell people who might need of course, the consultancy services, you know, to get more and more insight, because we're cutting this because of time, but people would wish to extend this conversation with you to get you. Just in a minute.
Now, for those who are interested to, number one, understand that each and every person needs an insurance. and no one is overinsured. Some people say that I have insurance. No, no one is overinsured. If you are in a position to afford more, please take as much as possible. And if you'd like to reach me, you can reach me on 0708 94 96 85. I'll repeat, 0708 94 96 85, or Beverly Akech at gmail.com. And I'll be able to help you walk that journey. And yes, for now, for those who will take up the chance and the opportunity, I'll do it for free. But after that, there are charges.
All right. Right. Thank you so much, Beverly Akech, for that insight on financial security. We really appreciate that.
Thank you for having me.
Now, we're taking a very short break. We still have much more, so stay with us. See you in a moment.